So welcome back again with measurement of national income. The second method we are doing, income method, and in this we are going to talk about precautions that need to be taken while calculating national income by income method. So have a quick look while I just talk about it. Like for example, now if we talk about precautions, we should not include any transfer incomes. So they transfer income should be identified and they should not be included in domestic income. So for example, we know what's a transfer income, right? That no, it's just a unilateral income. There's no quid pro quo, nothing in return you get. So some examples of transfer payment are all taxes paid by production units like sales tax, octroi, etc. Then all gifts, donations, charities, scholarships, or even lottery prizes, etc. So these payments do not lead to creation of any new factor income. So sometimes it's found that lottery is also under a windfall gain, which is not again included. So, and second is should not include capital gains arising from sale of second hand goods. Now, what is capital gains? It refers to the profit arising from the sale of second hand goods, like for example, buildings, machinery, etc. So, sale of second hand good is not a current production activity of the owner of these goods. As such, any capital gains arising out of it is not treated as factor income. However, but if there's a brokerage, some money given to the broker or a commission, so that should be included in factor payments. Of course, and then there's another one that one should be careful in not including income arising from the sale of financial assets, like for example, shares, bonds, debentures, government securities, etc. So any profit arising from the sale of these is capital gain, which is not treated as factor payment. However, again here also, when you're talking about the broker charging or taking commission, well, that is factor income for them, and it is included. So there's another one that often is said is includes income from self-consumption output. For example, when a house owner lives in that house, he does not pay any rent, but in fact he pays rent to himself, since rent is a payment for services rendered. Even though rendered to the owner itself, it must be counted as a factor payment. So that is also there. So these are certain precautions that one must take care whilst one is estimating national income with the help of income method. Alright, so and sometimes they'll ask you, like for example, any windfall gain, is it included? You'll say no, it is not included. Or for example, if they say owner occupied houses, the rent, yes, self imputed rent is included. Something like that. So you get statements like that on which you have to uh, assess whether it has to be included or not included, and that comes with a lot of practice. But if you have your definitions clear, it becomes very simple to segregate what has to be included and what has not to be included.